Hey everybody, this is John and welcome to the free video. We're going to take a look at a couple of the key asset classes in today's video, one of those being the yen. So here's the yen as represented by the ETF FXY. You can see here this is kind of a mutant head and shoulders. You got a double shoulder here, and then you got a head, and then a shoulder here. So, it's like a Siamese twin head and shoulders. But you can see here that there is it's looking a little toppy and trying to crater. Now, here is why it is important to, if you're looking at the ETF, to also look at the futures contract or the underlying, in this case, currency. In this case, you can see here that there's nothing special in the squeeze. However, if we switch over to dollar yen, okay, USD JPY, which of course this is the inverse, you'll see that there's a squeeze that is fired long, okay? So dollar yen, one of these is like yen priced in dollars, the other is dollars priced in yen, and they move inversely. So right now, this is triggering long, which would push FXY lower. Why is this important? Well, dollar yen bullish, which means yen cash bearish, is bullish for stocks. All right, so just an important distinction there. And if we go over and we look at, say, the spiders today and how they did, you can see that the spiders had a really solid day today. They've still got a lot of heavy lifting above them. They certainly have. This level right here is a very important one at 265.90 with that fire line. But you can see we did get a momentum hook here, and that's typically good for a multi-day rally for the likes of something like that. So I'd certainly be very, very careful here on the short side. In fact, one of the best things that you can do in an environment like this are long straddles and strangles. Because the volatility is so high, you're typically getting big moves every day, especially at the open. And so when we're doing straddles and strangles and things like that on here, for example, I like to do them, place them towards the end of the day, take action at the end of the day, midday, and morning of. So how do you do that? So, at the close of the day here, you buy a strangle, and then, the next morning there's a big open, so you close out the strangle, and then initiate another strangle here. And then the next day it gaps up. So great, you close out the strangle and initiate another one. And you can keep rolling these strangles almost every day, and it's great because you sleep well at night because all you need is volatility, and guess what? We've had plenty of that in this market. And for those of you that are interested in straddles and strangles, we are going to be holding a free webinar on that coming up next, or actually it's in a couple of weeks. It's going to be Tuesday, April 17th. All right, so it's right there. But if you'd like to claim your seat now, you can. Just click on that. This will be a totally free webinar at 7 o'clock Central, and it's called Simpler Straddles and Strangles. Reserve your spot now. How to safely extract big gains from volatility. And this is a strategy that we've been doing quite a bit in the trading room. And a lot of this I learned from Bruce. And so some of the things that Bruce is going to be talking about in this webinar is the case study, the 125K SPX straddle that caught the February crash, when to use straddles to catch lightning in a bottle opportunities, extracting max gains from wild price swings without getting wrecked. This is nice, by the way. We did one of these in NVIDIA during our live event a couple of weeks ago, and it was great. We bought the strangle for $7, went to sleep, slept great because it didn't matter if it opened up big or crashed the next day. It ended up crashing down like 20 points, and we were able to exit that strangle for like $15. So 100% gain overnight. Very minimal risk, because in this kind of environment with the volatility so high, if you're flipping it out the next day, your premium erosion is actually quite small. Obviously, if you hold on to those things and the market gets quiet, it starts to erode. But playing this day-to-day volatility is a nice little kind of roller coaster of just cashing those in. So why even newer traders with small accounts can do this, and 2 rookie mistakes you should avoid like the plague. All right, it'll be a lot of fun if you haven't tried this strategy before. It's actually fairly simple as well. All right, have a good night. Hope to see you live in the trading room.